So now we're going to switch over to Chris Prevatt, and he's not here in person with us today. And so we're going to be sharing him with Zoom. Some background on Chris: he received both his bachelor's and master's degree from Auburn University. He came to Florida as a regional specialized agent, but now he's a statewide specialized agent who provides information on the economics of livestock and forages, on management practices, and on marketing strategies for cattle producers. You have likely seen his monthly article in the Florida Cattleman's Magazine titled Florida Cattle Market Price Watch. Chris couldn't be here, as we said, so he's going to be on Zoom. And Chris, we challenge you to do that high quality count with no input. So good luck with that. So go ahead, Chris.
Awesome. Great to still be able to present with you today. I'm going to go over what our beef cattle market looks like right now. I just kind of want to hit some of the highs and the lows. I provided some additional information in the proceedings, but I'm just going to give you a quick 15 minutes, kind of the big picture of what we're seeing right now in the beef cattle market. So current thoughts in terms of kind of where we are in terms of the beef cattle industry is what we were starting to see as we kind of got out of late 2020 is we started seeing increased levels of beef, pork, and poultry supplies that were available. Now, is there distribution problems throughout the United States? Still, yes. There's increased supplies, but if there's trucking difficulties, then it might not seem at a local level sometimes that there's increased supplies. Consumer discretionary spending is definitely a place where every single economist is looking, as prices for consumer goods all over the place have really been volatile. We're interested in how much money consumers are willing to spend on beef going forward. There's still a decline in food service outlets. We lost about 110,000 food service outlets in 2020. We got about 50,000 of those back, but so you're still 60,000 outlets down. The big picture there is that now there's 50, 60,000 food service outlets that don't have that potential to sell beef. What have we seen over the last 13 months now? Feedstuffs and corn particularly just going all over the place. So I think that's going to be a big factor as we move into winter, to lock in some feedstuffs, get it on hand, have that inventory. It's really going to be important for us as prices have just kind of been all over the place on corn over the last 13 months. Just in terms of some economics, obviously unemployment remains elevated. Inflation is high. Stimulus measures in the price of the stock market around the world have masked some of the serious impacts that the pandemic has had. One of those impacts is obviously that a lot of products are out of stock. There's a lot of products that are at record high prices. Just-in-time inventory, it doesn't work whenever there's a serious pandemic. We're not going to recover on a lot of inventory items very soon, and supply chains in general are destroyed, not necessarily just due to the pandemic, but also due to some of the labor issues that we're dealing with in 2021. So a big factor that's really affecting us right now, non-pandemic factor, is the drought, the severity of the drought in the Western United States. Since I got to own it in 2014, seems like every year the West has experienced some significantly drier conditions. So this drought is going to continue to influence some liquidation decisions in the West and in the Northern Plains in 2021. And that has that potential to increase supplies in the short term, but in the long term, there'll be a lack of feeder calves out there in a few years that provides that same benefit that we saw in 2011, 2012, 2013. So it's definitely a positive for us here in Florida to be able to market some feeder calves at some higher prices in the next couple of years. So we got the January and the July 2021 U.S. cattle inventory report. What did we from those numbers, we knew that beef production and cattle numbers are now beginning that tightening stage of the U.S. cattle market. So we've got lower levels on all cattle and calves. On beef cows, we're down. We peaked in 2019, so we're on this. We're starting that trough of the U.S. cattle inventory. So it's something for us to definitely take into account and kind of begin to plan for as we see higher prices moving forward. So market price risk, markets are reflections of all sorts of things. Typically, we've talked about it in terms of supply and demand fundamentals, but obviously human emotions come into play, and human emotions can lead to herd behavior. The door's only so wide, but if everyone heads for the exit at the same time, you get some significant declines in price. And I think not necessarily seeing that in beef cattle by any means right now. We saw that in March 2020. But there's also outside market forces. A lot of things that are taking place right now that necessarily you wouldn't think affect the beef cattle industry, but as the Federal Reserve, as they make adjustments to their policy and how that's going to impact the dollar, it's going to impact, our exports and imports of U.S. beef. So it's going to definitely have some impact on us. I want to just share with you, this is the U.S. Feeder Cattle Index. So we're talking about truckload units of 8-weight cattle here. Talking about big cattle, but at the same time, this is kind of what our cattle in Florida are based on. We're talking about 2020 U.S. Feeder Cattle Index here. You had a price range from the high to the low, $32 a hundredweight, over $250 a head there. So if you think about, not marketing during this low time period where there was a lot of volatility, plus the CFAT payments that we started receiving during the summer months there, if we were marketing in that August time period, I mean, we got the best of both worlds for cow-calf producers here, that we were marketing at a period where feeder cattle prices had recovered, as well as receiving our CFAT payment there. There were some significant profits for some individuals. Obviously, this was a timing situation, but there was still some opportunity for us here. But $16,000 a truckload change in price in 2020 from our high to our low there. 2021, obviously, there's been a significant run up from May to an August high there. 159 for an 8-weight feeder steer located in the Midwest. We've declined over the last month. We've declined about $7 a hundredweight there. If you're looking at feeder cattle futures, you got $15 a hundredweight decline over the last month. So there's still a lot of volatility, a lot of prices moving around for us. It's important to think about it, that consider it in our marketing plan, but at the same time, realize that this is kind of what we need to be thinking about as we begin to start thinking about marketing some cattle, and whenever we start thinking about marketing some cattle in summer 2022. So we finished our Florida Cattle Price Market Watch. So we finished it for 2021 for marketing our cattle in August 2021. Charted out prices every single day they traded this past year on all the weekdays. You looked at their 3-year average. In most cases, the second half of the year, we were significantly above our 2020 price level as well as our 3-year average. So in pretty good shape. When we look at what that price meant for us, so that was feeder cattle futures. Now looking at what these Florida feeder calf prices meant for us, 550-pound feeder calves. We were above our price objective during the second half of the year when we were marketing our cattle. Never even came close to our break-even price there. We're at the end of the year, we're about $150 a head profit. Is kind of where we ended 2021 marketing these cattle in August 2021. And I'd say that's an absolute great year for us. Making a profit $150 a head is definitely is not something to be frowned upon. And I think if we can continue to manage some of these costs, we can do even better in 2022. So I mentioned corn all over the place. So think about where we were. If we talked about where we were last August 2020, corn would be even much lower. But think about it, December 2020, you had corn at $4.72 a bushel. What did we know? Moving forward, every single kernel that's going to be consumed by cattle is going to be replaced by one that's significantly higher. You had fed steers there, cost a gain in the feedlot, 78 cents a pound. You move to July, so the last data set I have from Kansas on this, close to $7 a bushel on corn. So you've got over $2.50 there higher. You got cost of gain on steers 30 cents a pound higher. You just got a significantly higher cost environment for us here in 2021. We'll see where this goes moving forward, but for the short term here, we're going to have high cost of gain. Think about where we're going to be next year. We know where current inventory levels are for feed, but if as tough as the drought's been on a lot of these corn growing states in 2021, we know we're going to get short again spring, early summer 2022. So whenever you've got high feed costs, you've got high feeder cattle prices overall, you don't have great fat cattle prices. Long term, that doesn't work. So eventually, one of these factors is going to have to change abruptly. Hopefully, these fat cattle prices are going to go up, and some of these feed costs will come down. But if that stays kind of steady here, then what we would typically think is that cattle feeders are going to pay less for feeder cattle. So moving in just to some long-term beef projections for U.S. beef production, you see the decline over the next several years. You see that decline over the next several years out there, 2024, 2025, kind of being a low there. That's going to be very important whenever we start thinking about getting back to some of those higher price levels, 2014, 2015. We're going to need those lower levels of production to get back to those price levels. We're also going to need significantly higher U.S. beef exports, and that's what we've seen driving this market in 2021. You have U.S. beef exports absolutely cranking out exports to China. Obviously China has not been a significant buyer of U.S. beef. They have in 2021. Their trade disputes with Australia continue to really, really help us send some beef to Southwest Asia, as well as into that mainland China, not just Hong Kong anymore. Not talking about Taiwan, but mainland China, just absolutely, being a significant buyer of U.S. beef here in 2021. So as we move forward, hey, that Southwest Asia, it's just going to be continue to be a larger buyer of U.S. beef, and that's going to really, really play an important role for us to get higher feeder calf prices for us in the future. So I always like to throw in here FAPRI's long-term outlook for price projections. We've got a plan over the next 10 years. Think about saving replacement heifers today. We've got to make a long-term plan for price projections to help us determine how many replacement heifers to save or even purchase. And what we've got here, so this is based on 500 different observations that they ran their model. And over the next 10 years, you've got a peak there in 2027, $184 a hundredweight. Again, this is for Oklahoma City feeder steers, but whatever happens in Oklahoma City, I promise it'll happen in the state of Florida. So this is for 6 to 650 pound feeder steers. Typically, our 6 to 650 feeder steers are actually going to be very close to the same price, just due to the differences in the how much flesh and how much nutrition base the difference between those two cattle are. So just something for us to think about as we look back over the next, if we look out over the next 10 years to make plans for our operation. And two really, really important factors here is you've got that U.S. Beef cattle inventory declining, and then you've got increases in U.S. packing capacity. Now, so why haven't we necessarily seen more of an impact by those higher levels of exports in 2021? You've got U.S. packing capacity where, hey, they're not really having to go out there and really be aggressive for cattle. So you're not seeing those additional profits passed on to a lot of feedlot producers and then back to stocker and cow-calf operators. That's kind of where we are today on that side of things. Okay, so quickly just looking at, so we started a new year, we started a new Florida cattle market price watch. This is kind of what we're looking at right now, August feeder cattle futures prices for 2022. Now, here's the first thing you see is that we're $20 a hundredweight over the first, September through February. We're $20 a hundredweight better than the 2021 price as well as the 3-year average. That's a pretty good place for us to be whenever we're thinking about where we were compared to a year ago. So that August 2022, pretty strong prices here. I think costs will be higher, but again, $20 a hundredweight, whether we're talking about an 8-weight steer or 5-weight calf, we're talking about over $100 a head, and that's critical to us where we are in the marketplace today. So at this point, I think it's very important for us to think about and have a plan for inflation moving forward. Think about your critical needs for your business, your feed, some of your land rent, animal inventory that you have. Your labor has absolutely been an issue over the last 15 months, 18 months now, as well as interest rates. Planning ahead on and getting your hand around some of the potential inflation that's out there is going to be critical. It's going to impact your bottom line. Also want you to think about cost of production, because if feeder calf revenues only increased 5% for your operation, but cost of production increased 12%, obviously our margins are getting squeezed there. So we got to make sure our feeder calf revenues, cow calf, cold cow revenues are increasing at a rate that's greater than cost of production, or we're just going to get squeezed over this long term. These are just things I'm evaluating right now with some of my county extension agents. The first one's the cost of everything. I mean, whenever we're sharing fertilizer prices right now, we're talking about cool season forages with a lot of our agents. The cost of everything is extremely high. There's a lot of feed that's very difficult to get our hands on. So what are you going to feed this winter at what price? In terms of wintering the cow herd, let's put the pencil to it. Let's do some math on it. Price fluctuations are, just what I'm looking at in terms of the market prices, significant volatility out there. We're looking to see what's going to take place over this next year. And just based on looking at the past 10 years, there's probably going to be somewhere around $150 to $200 a head in volatility out there over the next 12 months. So in terms of a price range. And then the biggest outlier I'd say is out there is, what could impact processing speeds at meat packing facilities? Could they be inhibited by further COVID protocols or mandates? So I think what we've seen in 2019, we saw it with the plant fire. 2020, we saw it with COVID. Obviously, processing speeds at meat packing facilities are inhibited, significant price declines follow very fast, because they're not, cattle in the feedlots would start backing up, and it really, really hurts what we have in inventory, regardless of the quality of the cattle. So just to leave you with a couple notes here, obviously there's no telling what may transpire between now and the end of the pandemic. Just in terms of marketing, develop a marketing plan, have it, work on it weekly. Think about how we spend money every single day on an operation. how often do we make revenue in terms of marketing our animals? Only a couple times a year we're going to be getting those big checks, but we spend money every single day. For me, it's staying flexible, thinking about risk management strategies for our marketing plan. And then we always talk about relationships. Dr. Angle talked about relationships earlier, absolutely critical. And maintaining working capital to complete any marketing scenarios, and then evaluating your cash flow. What's your potential for liquidity? If you've got to sell something, what's the first, second, and third thing that's going to go? And I'll leave you with this. Words are just words. What do I need to focus on? There's two numbers that matter: what you spend and what you receive. The difference is what you get to keep. That's going to be your bottom line. So with that, I'll take any questions. I'll open this chat up and see if what I've got a couple. Just briefly, one of the questions was asked about what supplies do you see being impacted? Definitely feed supplies. Not just price. There's price on a lot of feedstuffs right now, byproduct feedstuffs, but it's very difficult to get, as well as things that are coming from New Zealand in terms of some electric fencing. It's been back ordered for the last 5-7 months in some cases. And then, do you envision cow-calf pricing changing for Florida producers due to the Midwest drought? If so, how and when? And absolutely, I think we definitely envision the drought in the Midwest, in the Western United States, Northern Plains, increasing some liquidation. And so from that liquidation, we would think 18 months to 2 years, there should start seeing significant increases in those Florida feeder calf prices. We would start to see those increases due to less feeder calves that were available due to the liquidation that took place from those cow herds in the Midwest. Well, thank you very much. And if anyone has any other questions, please send me an email. My contact information is right there. And I appreciate y'all's time today. I hope you have a great rest of the field day. I'll be on, and I'll be available on the chat if you need me. Thank you.